What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market we continue to see the bounce off the strong support, and we are now coming into the resistance trend line. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we're up 1.55%, and we see SPY coming into the resistance trend line right around SPY levels of 407, and if we do get a breakout above this level, that is going to look like a very strong bullish breakout, but we will have the 20 simple moving average just above at 410. Now just a quick discussion about the back test that says the bottom is likely in from June. We did go between the average drawdown and the max drawdown of 2009, and now we are starting to see a very impulsive bounce off that support. So if you've been paying attention to that back test, this could be more compelling evidence that this is going to be our bull market high or low, and for that reason you need to instantly get a lot more bearish if we ever see SPY breaking down below that level at 390. At this point in the game, this is likely going to be our drawdown for the bull market scenario. So if we cannot hold this support at SPY 390, that is going to be very bearish and tells us we will likely retest the June lows. Now, if you are wanting to get bullish and you have not yet started a position, I would not set your risk too far down here at 390, and I would up your risk to about the 50 daily moving average, which is right around 402. We also have the gap fill and the moving averages right around SPY 400, so you can also use that as a risk level as well. Now, typically, if you get a bullish breakout, you are going to be looking for some type of retest, and that could be the point in time that we do go down to fill that gap. And then a confirmation of the bull breakout will be a rally, which will take us back up to battle the bear, who is still waiting up there at SPY 416. So just keep all of this in mind over the next few trading days, that if we start to get the bull breakout, you're looking for resistance right around 410. And in the bullish scenario, we could either continue to push higher straight to battle the big bear now, or we're likely going to get a retest of the breakout, possibly fill that gap, and then find buyers yet again. So just keep all of this in mind. This is a risk on market because we are getting the positive bounce off our risk level at 390, and you're instantly getting risk off if we break down below it. If we did break below 390, it would be a significant flush to the downside, and that's what I call the waterfall wave of selling. But we do not need to worry about living in fear. We will see it happening in the price action if we start to reverse from this resistance. On the Nasdaq 100 triple Qs, we were up 2.19%, and the triple Qs did get a close back over the 50 daily moving average, and they also did have a gap up and run. I know on the daily candle it looks like the gap below filled, but that is bad data. That gap is still open, and that gap fills when we get back to about 302. So just like SPY, we're starting to get the bull breakout above 307, but this is also going to be our resistance trend line, so it is possible we see a reversal from this level. And if we get the breakout, the next resistance will be right around the 20 simple moving average at 312 and our resistance at 314. Above that, we'll be looking to battle the big bear at the gap fill at 322. And keep in mind, you're setting your risk on the triple Qs on a breakdown below 293 to instantly get more bearish. Or if you want a higher risk level, use the support trend line up here right around 303 and the gap fill at 302. If we get the bull breakout and successful retest of that support, that is going to look like confirmation that we are starting another bull rally, so do keep that in mind. On the Dow Jones, we were up 1.27%, and the Dow Jones also came back up to the 50 daily moving average and the resistance trend line at 322. We do have a gap to fill to the downside right around 318.5, and the bull breakout above 322 should take us up to about 326 and then about 329. And if we start breaking above 329, look for a retest of 333 and the gap fill at 336. Keep in mind, we are at strong resistance levels, so if we do start to see a rejection from here, you need to look for support at either the gap fill below or the support at 315. And if we get a breakdown below 315 and a retest of the low at 312, a break of that likely means we're filling the gap just below 307. On the Russell 2000 IWM ETF, we were up 2.01%, and we did get the daily close back over the 50 daily moving average, but we did not yet close above the resistance trend line at 188. If we get the bull breakout, look for the next resistance at 190 and 191, and above 191, look for a retest of the previous high at 195. If we get the breakdown below, look for the gap fill at 184 and the support right around 183. And if we break all of that support, it is possible we come back down to retest support at 178. And we're instantly getting risk off for a bear market scenario if we lose that support. On the ARKK ETF, we're up 4.45%, and ARKK continues to follow through after getting the breakout off that bounce off $40 and closing back over the resistance at 43, leaving a gap to fill to the downside just below that support. You can see we're instantly finding resistance at the 20 daily moving average, which is right around 44.60. And if we get the break above that, look for the 50 daily moving average and resistance zone right around 46. and above that we'll fill the gap at 47. While we are below 47, we are still in a confirmed bear market, so do not get risk on until we can break above that level or set your risk at support below at 43. On the VIX, we were down 3.47% as the VIX gets the second day in a row closing below 24, which is a bullish breakdown in the VIX because we need the VIX to crush to get more bullish. And the next likely target for the VIX is going to be this gap fill at 21. So you can stay risk on and bullish while the VIX is below 24, but instantly need to get more risk off and cautious if we see a spike of the VIX back above 24. On Bitcoin, we're currently up 10.26%, and Bitcoin is confirming that crypto winter is likely over, just like I've been talking about. And if we can get the bull breakout, this will look like a very bullish double bottom. You can see high volume buying right off that support level, so the bulls are doing everything they need to do. And the next bull breakout will be the breakout above 21,600 and then getting back over that 50 daily moving average. Above that, we should retest the trend line right around 23 to 24,000 and that resistance zone just below 25,000. On Amazon stock, we were up 2.66% as Amazon did gap up and run today and came all the way back up to the 20 daily moving average. So you are instantly going to have resistance at this level, which means we could see a pullback to fill the gap below, just below 130. Below 130, we have strong support around 128 and 126, and you're getting risk off below that breakdown for the gap fill at 122.84. If we break above the 20 daily moving average, look for resistance at 136 to about 137, and it is going to be a lot more bullish if we can break above that resistance zone. On Microsoft, we were up 2.3%, and Microsoft is finally starting to show signs of life ever since it hit that support at 252, and we are getting a bull breakout above the resistance trend line at 263, with the next likely resistance zone right around 268 to about 270. If we can break over 270, it is going to look extremely bullish that we could be reversing the downtrend in the short term, so do keep that in mind. If we start to see a pullback from resistance, look for a retest of the support trend line right around 256. On Nvidia stock, we were up 2.84% as Nvidia continues to pivot off that support right around 134 and coming right up to the resistance at 145. A rejection from 145 will likely fill the gap at 140, and below that, look for a retest of the low at 134 or the next leg lower at 129. On a break above 145, you're looking for the gap fill at 150 and resistance at 156. On Tesla stock, we're up 3.6% as we see Tesla looking very impulsive and very bullish ever since we had that double bottom on the 1 hour chart. And we will have a gap to fill to the downside right around 290. So if we do start breaking back down below this resistance right around 297, look for that gap fill below. And below that gap fill, we have support at 283. Tesla is risk on above 283, and if you want to up your risk level, it's now 297, with the next daily resistance up there at 309, and above 309, our next price target is all the way up there at 336. On Apple stock, we're up 1.88% as Apple is bouncing off 154 and coming back up to the 50 daily moving average at 158. This is still resistance, and it's still possible to get a rejection from this level and a retest of 154. And a break of 154, you're looking for the price target at 151.5. Above 158, we're looking more bullish and likely going to fill the gap at 163.5 and the 20 daily moving average, which is also our resistance trend line. On the financial sector, we're up 0.91%, closing back over the 20 simple moving average and looking a lot more bullish while we're above the resistance trend line and above the 50 and 20 daily moving averages. The industrial sector was up 1.3%, coming very close to retesting the 20 simple moving average, and we do have a large gap to fill to the downside at 94. The healthcare sector was up 0.88%, getting back over the 20 and 50 daily moving average and continuing to build out the right shoulder on this very large inverse head and shoulders, which is a very bullish pattern. Look for the next resistance to be right around 132 and then 134. The energy sector was up 2.5%, closing back over the 20 simple moving average after testing that support trend line and getting a positive bounce. You could stay bullish as long as we're above 79, but if we break below 79, look for a retest of support down here right around 75. So jumping back over to the S&P 500, we are without a doubt looking a lot more bullish with the very strong bounce off of that critical support at 390, but we are also sitting directly at critical resistance levels. The backtest that tells us the bottom is likely in is starting to confirm with the price action, but we will want confirmation of the breakout, and we're very close to knowing if we are returning to a bull market. From these levels, the market could go any direction it wants to because it could easily get rejected from resistance or blast right through it and start building that bull trend. So know both scenarios, know the risk levels, and have a trade plan that's prepared for either direction. Remember, I always tell you, manage your risk at these risk levels I'm giving you and have a trade plan that is preparing you for both moves, know both scenarios, and then act accordingly. Also, don't forget I'm still running the 50% off coupon code for your first month of bank trade alerts. Just apply the coupon code Labor Day, all one word, no spaces at checkout. I think it's going to be a very strong finish to the year, so if you've been considering trying bank, now is the best time to do so. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where I give you all of my intraday updates and analysis. You can find out how to join bank or the Stocks Channel Discord by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.